SoFi stock kicked ass and took names today, baby, closing up 9.62%. You guys already know the deal, and you know what time it is. It is time for a SoFi stock update. So let's not waste any of your time. Let's get into it. We have a lot to talk about. Hit the like button and subscribe to the channel. In the meantime, if you guys have not already, only about 20% of you guys are actually subscribed to the channel. Help us get to 1,000 subscribers. I do greatly appreciate it. As well as that, if you guys want to get totally free stock with Webull, Moomoo, and Public, links for those down below in the description. With Moomoo, sign up, deposit $1, get 3 free stocks, as well as an additional free share of NEO. If you deposit $1 upon your deposit clearing, you will receive your free stocks. Now let's get straight into this video. Like I said, SoFi stock was up 9.62%. And what do I always say here on this channel? Fed and fintech, they go hand in hand. Not only do they almost rhyme, they go hand in hand. So what actually happened today? Why did SoFi move up almost 10%? Well, it comes down to this. So Russia says promised de-escalation, not a ceasefire. Russia's promise to scale down military operations around the Ukrainian capital Kyiv and northern city of Chernihiv does not represent a ceasefire. Moscow's lead negotiator in talks with Ukraine has said, quote, "This is not a ceasefire, but this is our aspiration gradually to reach a de-escalation of the conflict, at least on these fronts." So what does that mean? Why the hell did SoFi rally off of that? Well, it comes down to this is de-escalation of the war in Russia and Ukraine. What has the Russian war in Ukraine caused for the world? Well, higher energy prices, higher food prices. What does that do? That affects CPI and makes the inflation readings very, very high. Like this next reading we get on April 12th is going to be terrible. It's going to be very, very bad. And at one point today, oil was down about 10%. It did come up throughout the rest of the day. But as this war comes to a close, and really once it stops, you're going to see a lot of room for the markets to start pricing and possibly less action by the Fed. Less rate hikes is bullish for SoFi stock. So anything that gets us there faster, like war in Ukraine ending, China beating COVID and opening back up, supply chains getting back to normal, those things are going to directly affect SoFi more than even other fintech stocks like Square and PayPal. Yes, they did do good, but they did not have 10% days. Not very many stocks had 10% days. The momentum trades, sure, but SoFi doesn't even fall in that category. So the Fed and fintech goes hand in hand with SoFi stock. And just like the video I made yesterday, SoFi will rally when this happens. It's exactly that. Once you see some of these inflationary catalysts going away. So this might likely continue. There's some talks that are ongoing here, I believe in the evening time, I believe across the world, over in Turkey, where Ukraine and Russia is actually meeting today. It's like early morning hours over there, I do believe. So here throughout the rest of the night, we will hear more updates on that. And Andrew Kirby today, he's the defense speaker for the White House. I believe he's the defense speaker. I don't know. I get the roles mixed up. But beyond the point, he said that they're not quite ready to say that they are withdrawing their troops, but basically that Russia could end this war today. If that happens, oh boy, get ready for some wild price action in SoFi stock. And along those same lines, it's not me just implying this, right? Because I don't like to imply anything. I like to bring you guys the data and the facts behind what I say. And they always prove to be correct because it's data and facts. Take a look at the federal funds rate for today. Let's go ahead and refresh this. It might take a second to load. You're actually seeing the federal funds rate projected going down. So we cover this on the channel all the time, and it's basically saying, I just refreshed this not too long ago, so we won't even let it reload because it's taking 10 years. But the 0.5% rate hike probability yesterday for May 4th, that next meeting, was 71.6% probability. Now it's 69.4% probability. If this war does come to an end here in the near term future before May 4th, then you will see this probability go down dramatically. It might go down to say 50%, and that's going to definitely help the markets rally. And that's going to directly affect SoFi stock. So what I've been watching, you know, it's all coming to fruition. Who knows? Things could reverse. Obviously, Russia, very unpredictable. So, not trying to forecast. I think it's the end of this because I don't. But doesn't matter what I think. It matters what the markets think. And they're starting to price that in, and it's definitely looking really good at the current moment. Now, we also did get a little bit of bad news as well. Check this out, guys. So it says US 2 to 10 year curve inverts for first time since 2019. Now, if you guys are unfamiliar of the 2 to 10 year curve, basically the spread between those, right? Or in other words, you'll get paid more right now for investing in a 2% bond rather than a 10-year bond, treasury bonds, right? And that shouldn't happen. If you put up money for 10 years, you should get paid more than if you put money up for 2 years. Well, when this thing goes under the black line right here, you always get a recession every single time. And we'll pull this up to the max, and this is the max ever since they started watching this back in 1976. You go under the black line, about 2 years later, recession. Again, back under the black line, recession. Under the black line, recession. Under, recession. Under, recession. And even happened back in August of 2019. Inverted for about 2 weeks back in 2019 in August. And then what happened? A recession. It's widely debated if this actually happened because people knew COVID was coming or what the real cause was of that. But it was still an indicator even back 2019. But what I want to make very clear is that before these rallies, or I should say before these recessions actually happen, there's rallies in the markets, right? So take a look back to 08. That's the best example. The yield curve inverted during 2006. And then 2000 and end of 2007 started to come out of that, right? But what was happening during all of this time in the markets? The markets were actually rallying. So this is an indicator about 12 to 24 months out, we're going to see a recession pretty much guaranteed. But in the meantime, it might be an opportunity to buy the dip for a lot of people that have previously sold out. And that's why the markets really didn't sell off too negatively upon this headline that the 2 and 10 year yields have inverted. So we'll see exactly if the markets just wrote it off today and if we'll react to them tomorrow. But it looks like the markets did not care all too much. Russell 2000 up about 2.65%, NASDAQ up 1.84%, S&P 1.23%, and the Dow Jones Industrial Average up 0.97%. Definitely a solid day in the markets nonetheless. But this market is going to be dominated around headlines, so be on the lookout for those headlines that do come out later on tonight, and how the basically pre-market, how futures open here in the next couple of minutes. Now, as far as the economic data, like I've talked about many times, you do have some more Fed speakers that speaks, like Fed Williams does speak on Thursday. Tomorrow, not anything too crazy. A lot of oil data that does come out, as well as GDP quarter over quarter. So that's going to be very important at 8:30 in the morning. That's a high volatility expected catalyst. And then you have a lot of jobs data, PCE, and unemployment data that does come out on Friday. So tomorrow, that GDP number going to be very important. And then the core PCE, as well as the initial jobless claims, that's what the markets are really going to focus on, because that, again, directly affects the Fed's decision. So it's looking pretty damn good at this point in time. Can't lie to you guys. I'm feeling very, very bullish on SoFi stock. Let's go ahead and look at the max Payne for SoFi by the end of this week. And it pulled up the SPY. Let's go to SoFi. SoFi. That kind of rhymes a little bit, huh? SoFi Technologies. $9 per share. That's what the max Payne is. That's the price where the most option buyers lose the most amount of money. So it's not a guaranteed science. It doesn't have to happen, but it tends to happen more than not. We did come down a little bit in after hours, down about 7 cents, 0.69%. We were down more than that, and we have since recovered just a little bit. And if we are looking at the overall picture for SoFi stock, I mean, we're back above $10 per share. We closed at $10.14 per share, down 7 cents. So we're at $10.07 right now. So above $10 per share. If you do continue to see this bullish momentum, especially the inflation concerns easing a little bit by the these external factors kind of going away, war in Russia, Ukraine going away, so on and so forth, then you will probably see SoFi stock come up to retest that $11.06 mark, and that's a 50-day moving average. If we break out above that, then you're clear to head to about $13 per share. As far as the volume for the day, 72 million shares that traded hands. Not a huge volume day, not a low volume day. It's kind of, medium. So keep that in mind. Looking pretty good. The RSI is pretty neutral, a little bit over neutral status, which is at 50. The RSI is actually at 51.15, so that does indicate to us that we could rally a lot harder than this before we do get on that overbought side. And you do see people say, hey, the RSI is overbought, don't buy it, right? You've probably heard that a lot if you've been in the markets for a while. As far as the MACD, that is extremely bullish, starting to widen this gap yet again, and we've actually been bullish on the RSI since March 18th, which is very surprising as the stock was trending down almost every single day, or every other day, green, red, green, red, green, red. The MACD was still bullish, and now is even getting more bullish. So huge signs right there. All is looking good as far as I am personally concerned. Now, if we do take a look at the short interest, like I said in the intro, SoFi stock kicked ass and took names today. Those names were the short sellers. With the short interest is now at 17.19%. Current shares that are sold short of 124 million. Cost to borrow max of 4.33%. Utilization of 100%. And days to cover at 2.94. Now, return shares for the day at 5.31 million. Borrowed shares at 3.78 million. So you did see a net covering of about 1.53 million shares. And you've seen a 10% day. That's a drop in the bucket. 1.53 million compared to 124 million, drop in the bucket. You're looking at big short squeezes if you do see a rapid de-escalation of CPI potential bearish catalyst, like the war in Ukraine, supply chains, all of that stuff. So looking forward to that. If that does play out, it looks pretty prominent here that shorts are going to wait until the last second to cover. Not any more institutional buying that is coming through. We still just had a lot, back here in this range, under $10 per share. And that's a really good sign. I just want to reiterate that again. If anybody knows what's going to happen with SoFi stock, it's definitely the insiders of the business. And as far as the option activity is concerned, we have 12 orders totaling $2.58 million, positive order value of 78% for the past week, 55 orders totaling $16.45 million, positive order value of 60%. And this has been a long-running theme of SoFi stock and institutions around SoFi. The ones that are bearish on the stock, they short the stock. But for options, as far as that is concerned, you don't see a lot of bearish activity. Why is that? Because options expire worthless. You don't want to put on a bearish bet on options and then lose all your money because SoFi stock is not going to go too much lower. It doesn't make too much sense. And I think institutions finally are realizing that. The last thing that we must cover here in this video, we're going to keep this one short and sweet, but it says SoFi stock bulls can rejoice as a great catalyst is coming up. If you come down to what they say about this actual catalyst, it says student debt refinancing volume returning. Despite the negative market sentiment, SoFi is not making any wrong moves. The overall markets have had an impact on every tech stock out there. Management took several steps to help the company deal with the pandemic, and they have done a great job meeting these challenges. Despite seeing its student loan origination volume drop drastically, the company managed to do well because of a 3-business segment operating model. The CARES Act led to lower student loan origination after the virus. The legislation kept a freeze in effect during the pandemic and after that. There's been several extensions, and the latest one ends on May 1st. Lawmakers could push for extensions, however, the pandemic has receded and things are getting back to normal. Therefore, it is likely that this is the last extension. If that is the case, then the student loan business can return and drive returns in the second half of the year. This is a major catalyst that the company can look forward towards. And that's probably why insiders have been buying so much SoFi stock, is they realize, hey, student loan refinancing, that's back in business, baby. We want to have as many shares as possible. Just to reiterate again, insiders over the past couple of months have bought about $2.36 million worth of SoFi stock, and they already own millions of shares of SoFi in most cases. Anthony Noto himself owns 3 million shares. So that's going to be all for this video. Hit the like button and subscribe to the channel if you guys have not already. I do greatly appreciate it. Help us get to 1,000 subscribers. and get yourself those free stocks down below in the description of this video. Appreciate you guys. Thank you for watching, and I will see you in the next one.